Well, the stock market goes down day after day, and you're most likely wondering, when will it all end? Well, if you want to call the bottom, there's two charts that you must watch, and I'll show you what those are. Then I'll do my analysis of the overall markets, and we'll look at the day trade of the week on NRDS. So lots of market weakness again this week. Rising interest rates in the bond market are the primary culprit, although certainly conflict in the Middle East is a big factor as well. There's two charts that you should watch to figure out when this market is going to bottom. The first is the chart of the bond market itself, and the ETF that I like to look at is TLT, and I'll show you that chart in just a moment. And then the other chart that I like to watch is the small cap sector chart, the Russell 2000, symbol IWM for the ETF. Now, the reason we look at the small cap stocks is because they are more sensitive to interest rates, and they have certainly underperformed the large cap market since the bond market has been falling. So as bond market prices fall, interest rates go up, and that's the prices that are established by the market, not those that are established by the US Federal Reserve. And then of course that trickles down into stocks, but the large cap tech stocks are not as sensitive to it as a small cap stock. So let's take a look at those two charts now. First up is the IWM. This is the daily chart. We'll look at the weekly and the intraday in a minute. Here is the downward trend line, and you can see that price has fallen away quite sharply. And so we want to watch for a break of this steeper downward trend line, and know that because we are far below the downward trend line, we are oversold and likely to bounce back, just like it did back here. Now, even though this market is moving lower, there's opportunities to buy stocks every day. But those buying opportunities are quite short-term, day trades, swing trades. And the key thing is you have to look for alpha. You have to look for evidence that the stock is trading on its own story. And that comes in the form of very abnormal volume and abnormal price movement. Now, at the end of the video, I will show you one of those stocks from Friday's trading, a stock that made a great move to the upside as a day trade, and it all started with the abnormal activity. But first, let's take a look at the TLT chart. So again, this is the US Treasury Bond ETF. So it's based on the bond market for treasuries, US Treasuries. And you can see that it too has fallen away from the trend line. Now it's started to stabilize a little bit this week, even though the IWM was seeking to new lows. This is actually starting to stabilize, and so I'm encouraged that maybe we're going to see this take a stab at breaking the downward trend line. We're certainly due for that. The markets are quite oversold. The stock markets, as we'll see in a moment, are near important support zones in many cases. So the market should bounce maybe next week. I've been waiting for it for a couple of weeks, but there's some important signals that we need to watch for, and I'll show you that next. So let's jump into my analysis of the overall markets. We're going to take a look at the S&P here. This is the daily chart, but let's start with the intraday chart. So you can see the steep sell-off this week, having broken down through support. So this is quite a bearish chart in the short term, but it's getting a little overextended. It feels like maybe the sellers are getting a little emotional. You can always tell when there's emotion simply by measuring the distance from the trend line down to where prices are. So this is the weekly chart, and you can see we're quite far below. It's much like we had back here. We got way far below, and then we ended up rallying back up to the trend line. We're not quite as far yet. We could have one more strong downward week, perhaps before a bounce, but I'm watching for that. So watch the intraday chart. Watch this 1 month daily chart or intraday chart for a break of that downward trend line as your first clue. Let's take a look at the NASDAQ, QQQ. It actually was a little bit stable at the end of the week. And so you can see on Friday, it actually moved up slightly, but it's still inside the downward trends. It's actually gone parabolic to the downside. And so we need to see this broken from a rising bottom and then break this one and then break this one. So lots of work to do, but the NASDAQ took a step in the right direction on Friday. All right, how about those small cap stocks? Let's take a look at the intraday chart. And there you can see steady declines all week. And we need to build a rising bottom and then break the downward trend line from a rising bottom. This is the more important line. So we got a lot of work to do to come back up to this, build a rising bottom, and then break up through the downward trend line. You can see for all these indexes, the stock scores are very low, and that reflects the chart patterns, which is that they're very negative. All right, moving on to the Canadian market, T.XIU. Again, weakness here, despite strength in gold and some stability in oil, although the oil stocks actually got beat up a little bit this week. But you can see that it's just a sell fest. The sellers in control the last 2 months and pushing prices lower. Here's the short-term chart, same as what we saw on the other markets. Well, let's take a look at gold and oil. Here is the gold chart. It continues to do well. That swing trade on gold and silver actually as well has been working. I still don't like the longer term picture because I think upside is limited by this resistance zone. We're coming off of a low. It's sort of a surprise rally that happened because of the issues in Israel and Gaza. And that, of course, has people looking for safety in gold. How about oil? USO, despite the issues in the Middle East, we actually had a little bit of a downdraft in oil prices this week. And then some oil companies had some negative earnings on Friday, and that hurt the oil companies, even though oil actually was up on Friday. However, what was always important is the trend, and the trend is still up. We're just sort of going into this little bit of a sideways, what we call a pennant pattern. And so if we do like this and then ultimately break to the upside, that would be bullish. And if we break to the downside, that would be bearish. That's what we want to watch for there. Here's the short-term chart. You can see it's very choppy, and that choppiness tells us that investors are uncertain about oil. All right, let's move along to some currencies. We'll take a look at Bitcoin first. It's had quite a rip the last couple of weeks. This week, a little bit of profit taking, and that's reasonable because just as those downward trends in the market have pushed prices down and away from the trend line, the strength in Bitcoin has taken prices up and away from the trend line on the daily chart of Bitcoin. So it probably is going to work its way back down to here, but it's still a favorable chart in the daily time frame. And here you can see the parabolic nature of the trend. It just went up like a curve. So typically you'll see a pullback. But long-term picture, I've been bullish long-term on Bitcoin since this break, and it's been steadily climbing ever since. I think we'll get a little pullback in the short term, but it should continue higher. So I would look for, buying on weakness on this one in the next little while. UUP is the chart of the US dollar. And you can see breaking out a little bit. Let's take a look at the 1 month chart. It's just sort of building this sideways range, but still has bullish momentum. And the 3-year chart, again, upward momentum. And finally, we're going to look at TBT, which is the inverse ETF of the bond market. It really tells us what interest rates are doing. When this is going up, interest rates are going up, and you can see that they remain in that upward trend. So this is another chart you can watch. Watch for a breakdown through support, through that upward trend line as a clue that perhaps the markets are ready to start to come up on the stock market and come down on the bond market or on the interest rate market, up on the bond market. All right, so I'm bearish on all stock markets. You can see it's all red, and that's probably meaning we're getting close to the bottom because when everything goes red like that, it's usually just before the bottom comes in, but we want to watch for the signal. Gold, short-term bullish, long-term neutral as it comes into resistance. Oil, a little bit choppy in the short term, so I've lowered that to neutral, but still long-term bullish. And then US dollar, Bitcoin, all bullish. Interest rates, I rate it bullish, meaning that they're moving up. It's really bearish for the economy, bearish for stocks, but it is a bullish chart for interest rates as it is going up from left to right. All right, let's take a look at the day trade of the week. And in a market on Friday that was down, still some stocks that can go up. And this was one of them, NRDS. It gapped up to start the day. I hate gaps. I never want to buy them at the open. Give them some time to build a pattern. And this one built a pattern. I was watching it right from the open. And then it made my action candle breakout right there on the 1 minute interval and moved up quite nicely. Got up to 4 times risk. Sell signal in here at about 3 times risk. So, in a negative market to get a 3 RR trade on a Friday, that's good enough. We can do that and call it a weekend. Well, hope you've enjoyed this week's Market Minutes. Leave a comment. Do you think oil is going to move up or down from here? It's in a choppy sort of situation. What are your thoughts on where oil is going to go? If you enjoyed the video, click the like button, subscribe to the channel, and most importantly, trade well.